Hello, everyone, and welcome to this webinar, Carbon Border Adjustment Mechanisms, What You Need to Know. This production has been brought to you as a collaboration between Chartered Accountants Ireland and the Institute of Chartered Accountants of Scotland, ICAS. My name is Fiona Donnelly and I'm Director of Sustainability at ICAS, and I got the long stick. I have the pleasure of facilitating today's conversation. But before we get into the content, it will be 1 hour. We will let you go at noon today. Just a few housekeeping matters, the usuals, just to explain how we're using the functionality today. The Q&A facility at the top, that's for you to submit your questions. You can do so anonymously if you choose, but we'll try and get through as many as we can at the end. If you want to have a chat among yourselves, again, please do so. That's the chat box also at the top of your screen. You'll have noticed that we are recording this. We will make this available on demand afterwards. It will be free for anyone to enjoy. It will be on the website, so you can revisit it or share it with colleagues and friends as you like. And also, we've got the power today. We have muted you, so pop the kettle on if you need. Do whatever you like. We have blocked your sound, so don't worry about any background noise. So today, while it's very tempting to talk about rugby, the reason we are in fact here today is indeed an intriguing new market mechanism, the CBAM, Carbon Border Adjustment Mechanism. And we've got two versions that we want to talk about today, the EU one and the UK one. And the CBAMs have impact across many different areas, maybe supply chains, profit margins, compliance, and hopefully even positive change to the environment. So we're quite fascinated by this. It's kind of simple in theory, but there's loads to think about in practice, in execution. So today we're going to try and steer the conversation away from the technical nitty-gritty. To give that justice, it would probably take a day. And today we're going to have hopefully a session with lots of practical insights. So I am delighted these insights are going to come from our panel of speakers. So if we could maybe bring them in, that would be fantastic. We have got three gentlemen today, and we have got Bryn, Ed, and John. We're all available on LinkedIn. You can learn more about us there. But if I can maybe ask the gents just to go through one by one, just to briefly explain your role and where CBAM shows up in your world. And Bryn, if we could start with you, please. Oh, you're on mute, Bryn.
A wonderful start. So good morning, everyone. I'm Bryn Reynolds, an ICAS member and also a Chartered Tax Advisor. I'm a non-lawyer partner at Pinson Masons in London. I advise on indirect tax and customs, usually in the dispute space. I've been working with clients on CBAM issues since the UK regime was rumoured, and UK CBAM preparedness, including potential risk of application and contractual risk allocation. My focus is very much on how the UK regime will operate in practice for importers and supply chains.
Thank you. Ed, maybe come to you next, please.
Good morning, everybody. Ed Byrne is my name. So I'm the Managing Director of Galco Steel Limited. So we have two sides to our business. We've hot dip galvanizing business servicing the steel fabrication market. And we have an import and distribution business in the access covers and drainage systems. So from our perspective, we would be importing wire and steel from the UK and from the EU. So that impacts on us on that end of it. And then would be importing products from the UK, EU and the Far East for actual steel and aluminium products that we would be importing directly from manufacturers and distributing here in Ireland. So yeah, we've had to learn what our responsibility is as an importer, and how to register and how to report and deal with our supply chain. So that's where we fit into the picture.
Fantastic, thank you.
I should just say we have businesses in both the Republic of Ireland and in Northern Ireland, so we cross both jurisdictions in terms of this.
Lucky you, lots of challenges there. And John, if we could come to you last.
Yeah, thanks, Fiona. Yeah, so I've been an inspector with the Environmental Protection Agency for around 25 years, and I currently work in the implementation of CBAM in Ireland. Most of my experience has been in the regulation, the licensing and enforcement of industry, public authorities, and the private sector through the implementation of EU directives. But I also have quite a bit of experience in research programming, which my main focus now and for the last 2.5 years has been on the implementation of CBAM.
Fantastic, thank you. So I think already attendees will get a sense of the breadth of the panel today. So 2 CBAMs, 3 perspectives, let's get down to it. John, if I can maybe start the first question with you. Could you, maybe in a nutshell, and this is a really unfair question, but I'm famous for them. In a nutshell, could you explain the basics of the EU CBAM? We know that the EU is further ahead than the UK's, but can you give us a wee introduction of the basics and what does good implementation look like? Thank you.
Sure. So the CBAM regulation is a new instrument for preventing carbon leakage. Its objective is to put a fair price on carbon emitted during the production of carbon-intensive goods entering the European Union, and encourage cleaner production and carbon pricing in third countries. So it applies to so-called CBAM goods, which are in the cement sector, iron, steel, aluminium, fertilizers, and also electricity and hydrogen. And it is linked to the phase out of free allocation in the EU's emissions trading scheme. So in terms of what good implementation looks like, is that importers of CBAM goods and or their indirect customs representatives are authorized CBAM declarants. These CBAM declarants then purchase CBAM certificates that correspond to the embedded emissions in the imported goods. The authorized declarants submit their declarations on time using, if possible, verified data from an accredited verifier. The authorized declarants then surrender the correct number of certificates they've purchased. So it also means there's needs to be effective communication between a large range of stakeholders, including the importers and indirect customs representatives as appropriate, national competent authorities, which is the Environmental Protection Agency in Ireland, the European Commission, the customs authorities, the operator of third country installations, and the accredited verifiers. So right now, that means importers applying for authorization, and that they need to be established in an EU member state, or otherwise they need to appoint an indirect customs representative who must be established in the EU member state and will assume the authorization obligations like financial liabilities and reporting obligations.
Great.
Yeah, so that's right now. I don't know if you want to know or maybe you can get into sort of next year and further on then thereafter later.
Yes, let's set the scene first of all, because I think it's just important to understand the construct. It's this pricing equalization measure to try and not disadvantage jurisdictions that price carbon, but it's being handled in quite a different way in the UK, or that's the plan, isn't it, Bryn? Maybe you could just give us the same for the UK, just a scene setter. What is the UK CBAM regime looking like? I believe it kicks off in January next year. And what are your clients kind of wanting to know? What's the chat with the clients just now?
Yes, it's an interesting one because from a policy perspective, the aim is very similar. It's designed to address carbon leakage in the context of our emissions trading scheme and to ensure that when goods are imported, they broadly have the same carbon costs as that faced by UK producers. Without it, the risk is that decarbonisation just displaces those emissions offshore, and that then means that actually global emissions could increase when the cost of the transport of moving the goods over to the UK is included. As you mentioned, it takes effect from 1st of January 2027, and we don't have a transitional reporting only phase in the UK in the same way that the EU did. In terms of the goods covered, it only applies to specified goods, and that's identified by commodity code in terms of tariff classification. And the relevant sectors that the UK have chosen to implement it in are aluminium, cement, fertilizers, hydrogen, and iron and steel. Broadly speaking, this is where the divergence happens from the EU, because in the implementation, whilst the policy goals are the same, the actual implementation is quite different. So we are looking at very much from parallel to the customs regime, And so the default tax point is going to be when the goods are liable to import duty. You've got the usual bespoke rules in place for the different regimes, but liability is ultimately going to sit with the importer of record. That's the person whose name the customs declaration is made or on whose behalf it's made. And then the UK CBAM charge itself is calculated by taking the CBAM rate times the imported embodied emissions, less any carbon price relief. So if it's from another regime which has a similar sort of carbon pricing, then you'd normally expect there to be a form of relief in relation to that. Ultimately, we expect there to potentially be some exemptions for goods originating in jurisdictions with a linked ETS, but at present there's no such linked regimes. And similarly, ultimately, we expect potential exemptions for international arrangements or agreements, but none of those currently exist. So it's coming into force from 1st January 2027. Businesses have until 31st January 2028 in the first year to register, which is quite a long period. It'll then be a much tighter period. What we're finding clients are looking at now comes under two headings. The first is working out if it's actually going to apply to them. So looking at the tariff classification of their goods and seeing whether those are included in the list, but also in terms of the contractual position, because obviously this is going to be a new tax that's being introduced. And you're then looking at within those, and lots of these contracts in terms of, particularly for large infrastructure products and projects, these have been agreed years and years in advance. So they're looking at within that contract who's actually going to have the liability to account for the CBAM. And that's raising a couple of interesting issues because obviously it's an unforeseen cost. As we've gone closer, it's become more and more foreseen.
It's amazing. It's kind of got that real tax nature of like the double taxation agreement, really, isn't it? If you're paying for the carbon tax from the source jurisdiction, then it's going to lessen the burden here. But yeah, it's going to affect choices, isn't it, in terms of where you're buying things from. Ed, my heart goes out to you. You're trying to navigate both of these things. Same, but very, very different. Gosh, how can you give any advice on the implementation of, what's the EU CBAM been like so far for you, and how are you getting your head around the UK CBAM additional requirements?
The concept is fine, I suppose what we discovered at first is that you have the denial stage, you have the oh God, here's something else I just don't have time to think about, I'm not interested. Do they really mean this? It's the head in the sand mentality. And from what you've described there, we had 2 years to get our heads around it. You've got 1 year to register. So I think if the first advice to people is you need to get your hands dirty on this. You need to get over yourself and you need to get stuck in because the difficulty is not in understanding what you import. That's easy, right? We know what we import. We place purchase orders with suppliers. So recording the amount of steel or aluminium in our case that we bring in is not a complicated process. The complicated process is registering, and these things have to be done through portals, and you have to assume there's going to be hoops to jump through and information required. And you have to be prepared to put aside a substantial amount of time to get yourself registered, as in days, not as in months. But it can be a challenge just to get over the line. Having done that, the biggest problem you're going to run into, and this is where we still struggle, because as a CBAM declarant, it took us time to get our heads into the space where we're going to do this. The problem we have is that our suppliers have no interest in getting involved in it. So we would be buying from third countries. We have one supplier who has 60,000 parts. He doesn't know the carbon emission data for any of them. So he can give us no information, and he's not interested in finding out. And he has no engagement, and he has not taken any interest in this. So we have no information from him to submit, and that's ultimately where the challenge in this thing is. If you have multi-layered supply chains where material is passing, you could have material, and I know of one instance, if material is passing from England into Ireland, it's manufactured in the UK, it's imported in here, and then it's sent up to Northern Ireland and it goes back to England. You have other stuff that's imported from China and is distributed into Northern Ireland from Ireland. You have other stuff that's imported into steel that's imported into Ireland, is fabricated here and sent across to the UK. So when you get into, if you're getting into the medtech industry here, I find it incredibly difficult because of the multi-layer supply chain they operate across continents. And they could have 50 manufacturers supplying into a product. So don't underestimate the problem you're going to have with your supplier. And I think the second part of that is, when they do get around to declaring their carbon emissions to you, they have to find a verifier, and generally those people don't exist today.
I think Chartered Accountants Ireland and ICAS, we're on that. We're trying to make sure that we've got enough support in the market for these new asks of people in the assurance profession. But John, can I invite you to come back on that, because that sounds really tough if Ed and the likes are trying to make declarations, but the data is not forthcoming. How can the EPA support with that, or what's your expectation?
Okay, well, look, we have a number of supports that we offer to people, and firstly, there is the option to use default values. The Commission published default values and benchmarks for CBAM at the end of last year that can be used if people can't get actual data verified. Can I?
So what do you mean default value? Could you maybe just explain that?
Sorry about that. So a default value, the Commission published what are called default values per CN code, so the tariff CN code that you import with. For each CN code, for each country of origin, there is a sort of a default value of the average embedded emission that will be expected based on the available data. And the Commission published that at the end of last year. So if people can't find actual data, they can use these default values. Obviously, actual data is preferred, not least because it might be for the importer, it might be lower and therefore entail a reduced liability. But this means that people can make a declaration with that, even if they don't get the verified actual data. There is also the capacity for operators now to submit their data using a portal into the CBAM registry. It's called the Operator Third Country Installations portal into the registry, where they can submit their data, submit their reports, verified data. Then they can allow the declarants that they've made a relationship with to get access to summary report data for that. So that obviously would mean that people could then use verified data. So
great.
Yeah.
And tell me, if default values were to be used and then actual values were available later, is there going to be a chance to make a prior year adjustment type change?
There's no plan for a prior adjustment. Now, the first declaration for 2026 imported goods is due on the 30th September in 2027. So you would need to get verified data into your declaration on the 30th of September 2027 in order to avail of that the verified data. There isn't a plan to retrospectively allow people then to sort of later on, let's say 2028, to say we've now got verified data, and can we claw some of that back? Excuse me.
Can I just pick up on something else there, which is that the default values, if I'm correct, John, have a 10% markup in 26, going to 20% in 27 and 30% in 28.
Yeah, there's a scheduled markup increase, 10% in 2026, 20% in 2027, 30% in 2028, and this is to excuse me. This is to encourage operators to submit actual data and get verified data. And so it's been phased in because there needs to be the build-up of capacity for accredited verifiers. Now, at the end of 2027, the Commission will review all the data and submit revised default values, looking into the markups and everything. So they will be reviewed in 2027 and a new set of default values published thereafter. And likewise, the benchmarks that are currently applied in 2026 for EU installations, these will be revised later this year based on the latest data in the emission strength scheme, and they will be applied in 2027. So the benchmarks are then the deduction for free allocation that will apply. So that correction will also, it has been continuously updated.
Thanks, John.
And just one other minor point on that. Then am I correct, John, in saying that we have until September 27 to submit 2026 data?
Yeah.
So as in from now, we have effectively 18 months to avoid using. So what you're saying is we would prefer not to have to use default values because they will become increasingly more expensive.
Yeah.
So we've 18 months ideally to get our suppliers in line and provide us to get them to register as suppliers, to get them to register on the portal with verified data that we can then submit. And if they can do it within 18 months, then the default values are irrelevant. And if they can't, and it is, I suppose, that's it, isn't it? Yeah.
Yeah.
A good motivation, and hopefully your supply chain partners will listen to that. Bryn, can you give us a sense of what's happening in the UK CBAM? I mean, default values, registry benchmarks, is it looking like it's the same sort of structure or thinking and logic in the UK?
Yeah, we will have similar issues in relation to this. So in terms of the practical advice, I'd say at this stage, I think the most important thing is to be working out who's actually going to be responsible for this, because in my mind, it's going to be a classic finger pointing exercise, potentially around the 20th of December this year, where logistics are pointing at finance and saying, finance, it was your responsibility. Finance is pointing at tax is pointing at customs are looking at the customs agent, and the customs agent is looking at logistics. And, everyone thinks it's someone else's responsibility. So I'd say the main thing to do is to make sure you understand who is taking overall responsibility for this project in the business. I think it's really important to stress test the financial impact of those default values because they are quite significant, and they can have that very large impact. Whilst you've still got the challenges, you might think it's going to be very easy to go out to your suppliers and that the supplier should have this. As Ed's pointed out, the overseas suppliers, maybe they're slightly more aware of it now than they were prior to the introduction of the EU CBAM, but generally non-EU suppliers, they're not particularly interested in this, so they're unlikely to be looking at this unless you're specifically putting it into your contract to say that they have some responsibility for providing that sort of data. And I think that goes more widely with the contracts. People need to be reviewing contracts now to understand who's going to bear the CBAM cost, who's going to be responsible for the data accuracy, and what happens if the methodology changes. So yeah, I think those are some of the points that I would have UK businesses looking at.
It's kind of hopeful that even like the new sustainability reporting standards and the details that they require for scope 1, 2, 3 disclosures, it would be nice to think that that's going to improve the data quality and throughout the supply chain. But yes, maybe that's being a glass half full kind of view, but let's see. Ed, what does this mean then in terms of the impact to your business and the commercial decisions? Because this is a real, margins must be different. It's an admin burden as well, and I just what does it mean for the business in terms of trying to comply with these new requirements?
I think there's a short, medium, and long term view on this. The short term is going back to what Bryn said. Is in our instance, it fell back to the finance department because ultimately they're the ones in our business who make the customs declarations, I think, and oversee the governance of this type of thing. So the finance director ultimately had to wake up one day and realize, actually, this falls on me to make sure that this happens. So and then he and his team had to get involved in it. So it took them a couple of months to attend webinars and to get their head around what it meant, and then to pass that information down the line. So you know, it does take a process to get there, and you do have to, and we had to make that decision. Once we had made that decision, and we had accepted that we were in this, you know, that's what I'm talking about, this denial versus acceptance. Once you accept you're in this, then it's a process, and it's a process that any business can handle. It's not overly complicated to complete the forms and declare yourself. So I've not, but it does take up admin time. That's the point. So there's an administration cost, and there's potentially, if you're a large importer, there's a potential for adding an extra body into admin as a cost that you would expect to just to handle this. But in the medium term, if the information starts to flow through the suppliers, through the portal, and you have a system, it's probably no harder than doing your VAT returns or that kind of thing. I don't see that this should be a medium term nightmare for an organized business to manage. I don't see that at all. And I think in the long term, to go back to, I suppose, the big thing about this and what it's intended to do, it is having the effect it's intended to have. It is making you look at your supply chain. It is making you ask questions about, should I be importing from the Far East? Should I be getting an EU-based supplier? I would say in the interim period, it had a significant impact on the UK suppliers into EU. A lot of EU suppliers went, do you know what? Why are purchases? Why would I buy out of the UK if they can't give me the information? I'll find somebody in Europe who can. And I think ultimately the objective is to reduce carbon, and that's where this goes. If the Chinese and the Europeans and the English or the UK people reduce their carbon emissions, this thing goes away, in essence, because there are no carbon emissions to pay tax on. So when you get to net zero, there's no reason for carbon border adjustment mechanisms, because your suppliers won't be generating carbon and you won't be. And the Chinese are probably ahead of the EU and Britain. So what you'll find in reality is the Chinese may become the preferred imported products because they don't actually have high embedded emissions. And if manufacturers in the UK and Ireland don't react, supply chains will move away from them to reduce Scope 3 emissions.
It's an interesting notion, particularly in these times of great sort of geopolitical uncertainties and, you know, the desire to have supply chain security. John, I just wondered, have you got a sense of how implementation will evolve and what the EPA will focus on? Because I think it's really attractive to think that this is actually going to be a game changer in terms of trying to make a positive impact on the planet. But you know, there's chat of, you know, resource shuffling and reducing regulatory arbitrage, and you know, there's kind of the workarounds and the sort of the trickery. Just, you know, what's your thinking?
Yeah, no, that's a fair question to ask, and it is one that's been asked within the EU and the European Commission. So in terms of how it's evolving, well, there was a lot of secondary legislation published setting out the rules for CBAM in the definitive period at the end of last year. And there's some secondary legislation to come early this year, notably on the carbon price paid in third countries, as well as the purchase of CBAM certificates and the format of CBAM declarations. But I suppose the most important one for people's liability is the carbon price paid in third countries. On that, there is obviously within the UK, there's a very advanced emissions trading scheme and a comparable price. So that deduction will apply. But there is, the Indians and the Brazilians have announced they're introducing emissions trading schemes. There are some states in China that have emissions trading schemes. Their prices are much lower than they would be in the UK or the EU, but they have responded. So we may well see that evolve, perhaps in the line with the way Ed indicated that they will have decarbonizing. But apart from that, there is a proposal that was published by the Commission again in December last year to amend the CBAM regulation further. Firstly, it would extend the scope to address the risk of carbon leakage in iron, steel, and aluminium products down the value chain, but also would address the risks of circumvention within CBAM regulation, and that includes the issue of resource shuffling that you alluded to. And there'll be further rules for attributing emissions to electricity and operation improvements to CBAM. So it is a regulation that has been reviewed and amended as we go to try to improve it and deal with some of the issues that you and Ed have raised.
So is it going to be a game changer for the environment, do you think? I mean, is that the expectation of it?
That it will be. I mean, you know, it is a new instrument, and it's already undergone legislative amendments, and more are due. So I understand that there's a certain amount of uncertainty, and there's an obligation on us to have a significant outreach and communication effort in the rollout of CBAM. But we have seen other countries, third countries, start to respond to CBAM in terms of introducing their own emissions trading schemes. And one of the key reasons for this is that if they have their own emissions trading scheme, the money that's taken for carbon from carbon emissions stays in those countries. So if in India has an emissions takes a carbon price, that money stays in India rather than being deducted and held within the European Union. So there is an incentive for third countries to have their own carbon pricing mechanisms, and we do see the beginnings of that. So look, we are hopeful, therefore, that there will be a decrease in the carbon intensity of the supply chain, and that there is some influence on the reduction in third countries. But we're clearly at early stages yet on this.
I would just add to that. I would think it's one of a cocktail of measures that will lead to the decarbonisation. So, for example, green public procurement is now a thing here. So when we are working on major infrastructure projects, we have to take account of green public procurement, and we have to reduce our carbon emissions on the products we're offering. What does that look like? That looks like buying steel produced through electric arc furnaces rather than blast furnaces. And if Port Talbot gets up and running in the next 2 years, which is anticipated, people will be buying green steel from Port Talbot, and if they don't get up and running, they'll be buying it from further afield. So the preference will go to whoever's manufacturing green steel, which will reduce carbon emissions, which will reduce your CBAM effect. But environmental product declarations and digital product passports are also coming. So it's part of this is always the chicken and egg. The regulatory environment will force you to stop doing things. The customer will require you to stop doing things, and the two will work together. So if digital product passports and environmental product declarations and CBAM all work together, the suite, the collective, and green public procurement, that suite of measures is making massive supply chain changes today. It's not coming, it's happening. I spoke to one big steel fabricator. He says 90% of his secondary steel comes from electric arc furnace already. So that's green steel, that's reducing automatically. And that steel, when you import it into Britain, will be cheaper to import under CBAM than blast furnace steel. So there's a supply chain change. And it's working through. Automation is the other big one. And I've seen this with at least 4 of our biggest customers have brought stuff back from the Far East by automating their production lines, using automated cutting, punching and drilling machines, robotic welding. And what they're doing there is they're cutting out, and this is the reality, they're cutting out the labor cost, which is the attraction of going to the Far East. The reason you go to the Far East is that labor is cheaper. In first instance, you're reducing the transport, you're reducing the labor element, so you're reducing your CBAM liability. So it's one of a suite of measures that are working.
So that's affecting what happens where. So it's the imports. It's still an import of a CBAM item, but you're picking it up at a different point of the supply chain. Is that what you mean, Ed?
You're picking up the raw material.
Yeah.
You're importing the raw material rather than the finished product.
Yeah, right. So that's
which is helping manufacturing in the country.
That's what I was thinking. It's an economic development.
Absolutely, there's an economic benefit to the country, and it is. But then the second part of that is you have to buy the right steel or the right aluminium to reduce your liability. So it's as I said, it's a suite of measures. Where the problem exists is and I'm not sure what's happening in the UK, but the environmental product declaration, the digital product passports are still years away from implementation. But that's where if the EPDs were being done for products, the CBAM declaration will be simplified because the manufacturers will be producing an environmental product declaration for the product, which would include the carbon emission, and we could get access to that information. So they're not happening at the same time, and they should be.
Yeah, it seems that data has got a ways to go before it's optimized. But I think in many areas in sustainability disclosures. But Bryn, let's come back to you on the UK side of things. I've just been reminded myself of KPMG Ireland did some research, and they came out at the beginning of the year that they reckoned CBAM is one of the top sustainability themes in 2026. So I just wondered, that's obviously a challenge and opportunity per their assessment. I wondered, what do you think of the challenges and opportunities that you're seeing from CBAM? I wonder if you can give us an example of a couple of each.
Yeah, it's always quite difficult to come up with opportunities from a new tax, but I'll do my best. Ultimately, it will mean that most businesses which are tackling sustainability challenges and wanting to demonstrate they are reducing their carbon footprint will be able to hopefully demonstrably be able to do so as a result of this, because it will cause businesses to start to adopt lower carbon methods of manufacture if they're able to do so. So I do think ultimately it will help reduce the carbon footprint of businesses and also potentially reduce those costs for transportation, because I think there are going to be two main sorts of businesses that will really benefit from this. The first is going to be UK domestic producers who now have a much more even playing field. If they were previously suffering as a result of the emissions trading scheme, they're going to have a lower cost now compared to the overseas competitors. And so therefore they're going to be able to be in a much better position than they would have been previously. So it's good for domestic industry in these sectors. The other people that it will benefit are the overseas importers who are on top of the data and are able to manufacture in a low carbon way, because their products now will start to look more beneficial compared to potentially their competitors. So they will be in a much better place. When we're talking about the challenges, the first thing I see is in commercial friction. So I think particularly as this regime is introduced, we are going to see quite a few disputes between importers, suppliers and customers around who needs to absorb the CBAM cost, because that could be quite significant, and it's not necessarily going to be an easy one for anyone to take within the existing contract economics. You could end up with potentially the development becoming unsustainable as a result of it. So I do think there are going to be some quite significant disputes on that. In terms of the other challenge, and I'll push this back to Ed in a moment, it's going to be around data governance and assurance. I'd be really interested to hear when the finance team took on responsibility for that. I think it's quite difficult because the finance team, in terms of the information they have the customs data and they have all that information available to them. That's going to come through their ERP system. They're used to dealing with financial numbers, but I certainly know it's a big challenge for people in finance who are told, right, you need to know the weight of these products, you need to know what the emissions are, and having those, particularly for businesses which are importing large quantities, how they actually start to automate that process rather than having it as a manual process, manually transcribing information, etc., and how that gets integrated into their financial systems.
If you want me to respond to that, then yeah, you're right. It is through the ERP system, but we have had to introduce amendments to our purchase orders, right? So we have a purchasing department, and they have been instructed to make sure that you include the weights in your purchase order, for example. Simple. That there's a thing called a PIM has become the fashionable term for it. So we would sell into builders providers across the country, and one by one they've all come up with a PIM, a product information matrix. So what you do is you get it's coming across from everybody now. So you set up a PIM. It's a product information matrix. It's an Excel-based document. You agree what the columns have to be, and people are required to fill them in. And when it comes from the head of the finance department to the purchasing, they're more likely to do it. So we found out that they are actually, people just have to get over themselves. And this is my point. People have to accept that they're doing this now. And you just adjust the purchase ordering. We also have a stakeholder engagement team, which is a whole new department for us. And this is why I say it's only part of a complex structure. So we have production, and we have purchasing, and we have finance, and now we have carbon team. So the carbon team includes one person from production, one person from the CapEx projects team, one person from finance, and one person who's a new hire called the stakeholder engagement person, and his job is to deal with the requests that come in from customers and suppliers about how do we comply and what do we need to do. So we will be and this is what is happening. This is the dynamic of how it's changing the market, right? So a sales rep will come back and say, I've just been looking at a rail project, and I believe we have to fill out a questionnaire to apply for the tender, and there's a 20% weighting on sustainability. And he goes, what the hell do I do with that? And the stakeholder engagement guy, who's now on top of this brief, goes, you just give it to me and I'll do it, right? And then, so he's taking that. If finance need to pull off him, he pulls off finance, and finance pull off him. He says, what are our carbon emissions this year? Well, that's in your gas usage bill. So he gets that bill from finance and he fills it in, and then they go, but it's a shared database. You set up a database and you set up matrices, and it can be simply Excel based. Shared Excel files is all you need. But it's a complex, it's bigger than CBAM.
Yeah.
CBAM is only one part of the decarbonisation matrix, and you need somebody who's in charge of your decarbonisation matrix at an administrative level.
I mean, it's interesting because the record keeping is going to be quite significant for this, and I'm sure the finance teams are starting to get on top of it. But you're then having to think around all of that information that you need to store. And obviously, whilst at the moment we're not looking at making tax digital in respect to CBAM, given the overall trend, you can see that at some point in the future coming in, whereby all the data flow needs to be automated. I'm not expecting that anytime imminently, as we've seen, making tax digital rollouts have been, significantly extended for all the different taxes. But I think it'll be a very interesting one to see how that record keeping requirement gets standardized and how that data then flows through. I think across all of the environmental taxes we're seeing, finance teams need to have wider access to things than just the financial data these days.
I think that's the kind of the open source data of good quality and everything. It would be nice to think that we could get there, levering technology to the fullest extent. But yeah, that's quite a target on the horizon, I would think. But there we go. Now, we do actually have a few questions coming through. So why don't I turn to a couple of these? Some of them are absolute humdingers. So let me try and pick off a couple of easy ones first. I think they're easier anyway. So one, is it correct that CBAM will only apply on imports, meaning items cleared for circulation into the customs area of the UK and not on shipments directly to offshore sites? John, I think that's maybe one for you.
Well, there is, if for example, if there is offshore, if there is a specific regulation actually on the exclusive economic zone of member states. So if you are, for example, let's say building a wind farm to the coast, then CBAM does apply to those goods. There's a specific implementing act for that published on the Commission's website. So CBAM does apply. So if you're taking in, let's say, wind turbines from China and deploying them wind farm, off the coast, of Ireland or wherever in the European Union, CBAM does apply.
Right.
So
Okay.
from a UK perspective, because I think it mentions UK, it's an interesting question. We'll see more on that. But I think whenever you're looking at importation, the bit that often gets missed is around the UK customs territory being 12 nautical miles. So you need to look very carefully at whether those goods do actually need to be imported into the UK or not. The scope of the CBAM is the whole of the UK, Northern Ireland, and that includes any goods which do enter the UK from the Crown dependency, so Isle of Man, overseas territories, etc., and the UK continental shelf.
Right. And then presumably between the CBAMs as well, the linkages. Right. Let me get to the next question before I confuse myself, I think, with that one. So next question. So does CBAM treat goods that were ordered or contracted in 2025 but physically arrive at the EU border in 2026? Does the CBAM apply based on the date of the goods crossing the border or the date the order or contract was placed from outside the EU?
Okay, it's the date of when they were released for free circulation. So your customs document, when they're released for free circulation, that's the date that applies.
So it's actually later than when they cross the border then. It's actually once they're...
Yeah, if it crosses the border but not released for free circulation, CBAM doesn't come in. Once it's released for free circulation, CBAM kicks in.
So about the 25-26 thing then? So I suppose it's all circulation. So yeah, okay.
Yeah.
Got you. Right. Just proof that this is very live. Here we go. So sorry, Bryn, do you want to come in?
I was just going to comment on the UK position. It's going to be based on the date of import, so it's going to be very important. That's usually going to apply when they're imported into the UK, but that means if you're signing a contract today and the goods are going to be crossing the border after 1st of January, you need to be thinking around CBAM now and how that's allocated in the contract.
So the roll forward of that is then try and get things delivered before 1 January. If you just, anyway, maybe one to think about. Right, so here's a very specific one. We buy steel from stockholders based in the UK and Northern Ireland and then manufacture it. Country of origin can be EU or rest of the world. Is the steel stockholder dealing with CBAM, or how does it affect us as the manufacturers? Does the majority of the impact lie with the steel stockholder who imports the steel?
Again, from an EU perspective, it's this bit about date release and free circulation.
Yes, yeah.
This is quite a
Yes,
concern.
yes. I would think the answer is that is yes. The steel stockholder handles it, and you pay him a higher price because he has paid it.
Yeah.
Then Bryn, the legal angle on that is
the importer record. So you're looking at who's the importer record. So either, and that could be the person who completes the customs declaration or on whose behalf it's completed, but you'll be looking at who's the importer record. In that case, it looks like it would be probably the steel stockholder, subject to any peculiar, you see lots of different ways of handling things, but subject to any peculiarities there.
But similarly, you alluded to earlier, it could be a contractual issue that you negotiate in the
so in this case, it depends on who's actually the owner of the steel. In this case, it sounds like it's going to be the individual stockholders who are going to be the ones who are choosing to import it into the UK. They own it, and then they go and then subsequently sell it to you. So in that case, the contractual discussion would probably happen between the person who's importing the steel and the country it's ultimately coming from. When you're then looking at the next stage in terms of the sale, if it's just an entirely UK sale and you're buying it in the UK, then you can't see there how the CBAM would apply. If you have a particularly confusing arrangement where, for instance, you're purchasing steel, you're the one who's importing it, but then someone's doing manufacturing on it on your behalf, but it's still your steel, then again, you're going to be needing to look at that in more detail. So it really depends on how the actual supply chain operates in practice.
Right. Righty-ho. Right, so here's a question for John. So what is the EPA's position regarding goods that originate in a third country moving from Northern Ireland into the Republic of Ireland? Is there a EU CBAM liability, and where does it arise? The Windsor Agreement appears to be silent on EU CBAM.
Okay, so yeah, so for such matters, I would refer people to the Revenue Import Policy, so the Irish Revenue Commissioner's import policy for specific guidance on any customs matters. Look, under the Windsor framework, the Union's custom code applies to all goods entering Northern Ireland, and the application of customs formalities to goods depends on whether these are completed in Northern Ireland or in the Republic of Ireland using a transit procedure. Our goods are released for free circulation in Northern Ireland. There are no customs requirements for goods moving between the Republic of Ireland and Northern Ireland, and no carbon adjustment mechanism obviously currently applies in Northern Ireland. That will change next year, as Bryn has outlined. So for those details, really, it's with the HMRC, where Bryn be the person to ask exactly what's going to happen then. So, I mean, that's as far as I can really say. Now, there's obviously a gap. CBAM won't apply in the UK until 2027, whereas it applies in the EU in 2026.
I'll give you an example. You could have Turkish steel arriving into Britain, into Northern Ireland. It could be fabricated in Northern Ireland, so purchased by a steel stockholder in Northern Ireland, sold to a fabricator in Northern Ireland, sent to the south of Ireland to get galvanized and re-imported back in as a galvanized product, and then it crosses into the UK as a finished product, or goes to France as a finished product. So the checks and balances on this will get tricky for people, but it goes back to, it's the VAT process again, isn't it? You don't double pay carbon tax, so you will have to calculate every time the product moves, it doesn't incur new tax, because if it has paid tax in the other jurisdiction, is real. I have sought revenue clarification and I have not been given an answer. So as far as we would be concerned today, if I import an aluminium recessed access cover from China and I decide to sell that in Belfast, nobody's looking for carbon tax on that, but they probably should be.
John, do you want to come in there?
Well, are you talking about the other way around? I know Bryn was going to say something then. I don't know.
I was just going to say, I never like to comment on movements from UK to Northern Ireland and Northern Ireland to Ireland without spending an awful lot of time in the relevant agreements and working them all through, because it is always very complex now. Yes.
I mean, look, there is an agreement in principle to align the emissions trading schemes and CBAM. I mean, that was, I think, in May or June last year. Now we have to see how that will proceed. Obviously, that would obviously be beneficial as soon as that could be realised, and it would resolve the issue, But at the moment, I think, as Bryn has outlined, it's quite a complex matter, and I'm not a customs expert, so and it would depend on customs, as to whether CBAM applies or not. Then we only once the customs says yes, it applies, then we would take it on then from that point of view. But look, hopefully we are able to get.
But the principle will be straightforward. If we're in that example, if I import a product from China, I will pay CBAM tax, and if I export it to the UK, that tax will have been paid, so there'll be no liability for the importer, because I will have paid the carbon tax.
Yeah,
same as if I was
will have already been paid.
So if I was importing it into Belfast, selling it to a guy in North Ireland, the tax would be paid in Belfast, but if I pay it in Dublin and send it to the north, the tax is still paid. So it will wash through, same as that. It's not a big deal. It goes back to what we talked about, the matrix. If you have a complicated supply chain, you have a very complicated product information matrix that you need to build up. And every movement has to be registered, and you have to be able to declare that and work out and that's why in our world it ends up with finance, because these are the people who are most capable of handling complex spreadsheets and have the governance mindset to know that they have to do it right. and they can't just throw information into a thing and hope it works out. So that's why it ends up in our finance department, because we know they'll do it right.
So it's never too early to contact your accountant, basically. Listen, one final remark. I just think, Ed, I mean, Ireland's years ahead of the UK in terms of the effective date for this. I just wonder if, what's the sort of one nugget, if I can ask you to come up with one nugget of what you wish you knew at the launch of the EU CBAM that you know now? What would you share and give, effectively give advice to the UK people following in your tracks?
It's a tricky one. I suppose it's not so much the one nugget. It's just you need to get over yourself and get stuck in, because you do have to get stuck in, right? And all these people, John and his team, and Bryn and his equivalents, and your advisors are there, but you have to get stuck in, and don't be putting it off, and don't be postponing it. The information is all online. You'll get good advice from good advisors, but ultimately it's your responsibility. And don't think you can bury your head in the sand and hope it'll go away. It won't.
Brilliant. Look, what a fantastic closing remark. Thank you so much. Really, really interesting. It's a conversation that we could have had for hours and hours, but thank you so much, gentlemen, for your time and for sharing the way you did. And thank you everybody else for joining us today. Hopefully that was useful, and hopefully you can enjoy it again on demand and share it with your friends and colleagues as you need. It would be great if you could give us a rating for the webinar. It will come up shortly. We also have, we're keen to learn from these events, try and make them better. So please do give us your candid feedback. We also, at ICAS, we've got a few events coming up, including on the 1st of April, we've got the Scottish election hustings, and other events regarding our new president coming up. But Chartered Accountants Ireland and ICAS, we've got a lot of resources online, as I say, and we'll add bits and pieces from this webinar too, including links to technical information. So look out for them in due course. So if all is done, I believe I just have to say thank you very much to everyone once again, and wish you all the best with your CBAM implementations. And here's to a great game of rugby on Saturday.